Hello and welcome to today's Your Daily Five. I'm Tom Bowley, Chief Market Strategist at earningsbeats.com, and I'm happy to join you on this Monday, March 20th. All right, so today, what I wanted to do with the five charts, first, I just want to look at the S&P 500. You can see now for several months, it's been going mostly sideways, a little bit of up, a little bit of down. Looked like maybe back beginning of February, we were making some noise, and now we're back in a downtrend. Currently today, you can see that we're back up to start this week, but where are we going to go from here? And so the focus of my Your Daily Five today is to talk about some of the clues that I look at, some of the charts that I look at, intermarket relationships, to help me in terms of trying to determine which way the market's going to go. There's a lot that goes into analyzing the market. It's certainly a lot more than just looking at the S&P 500. So today I want to use the correlation coefficient to show you five charts that I think can help you better determine which way the market's going. So I want to start off first with the QQQ versus the SPY. This is simply the Nasdaq 100 versus the S&P 500. These are the two ETFs that track both of those indexes. And when you go onto StockCharts and you use any two symbols and you separate them with a colon, it'll give you the relative performance of the first one versus the second one. So when you're going up on the chart, it means that the QQQ is outperforming. When you're going down on the chart, it means the spider is outperforming and the QQQ is underperforming. Now, down at the bottom, I've added the correlation coefficient. And if you go down to the bottom of your settings under indicators, you will see correlation. It's in alphabetical order. Just go down to the correlation and check on that. Now, I make the height of the panel 1.0 so that the height is just as big as the price chart. And then I can analyze. And what the correlation coefficient does is it will take a look at whatever you're looking at on the chart and compare it to some other symbol. Now, the default is the S&P 500, and that's what I wanted to use here. So what I'm doing is on the upper half of this chart is I'm showing you how the QQQ is performing relative to the spider. And then in the bottom panel, I'm showing you whether or not the direction of that ratio, what kind of correlation does it have with the direction of the S&P 500? So in other words, when the Nasdaq is outperforming the S&P 500, does the S&P 500 usually go up during that period? Or does it go down? If it goes up and the ratio is going up, then we will see positive correlation or readings on the correlation coefficient that are above zero. If they're moving opposite one another, then of course you're looking at negative or inverse correlation, where the S&P is moving opposite the ratio that you're looking at. Now, what I like to do is I like to highlight above 0.5 and below minus 0.5. And if you just quickly glance at that, you can see how often the ratio that you're looking at versus the S&P 500 is going hand in hand together. And if you look down here in the red shaded area, this will tell you how often they are diverging or how often they are inverted and performing inversely to one another. So in this chart, as you can see down here, the blue shaded area tells me that we have very strong positive correlation between the direction of this ratio and the direction of the S&P 500. So when the QQQ is outperforming the spider, we can generally expect the S&P 500 to go higher because throughout history, or at least on this chart, this is going back 5 years. You can go back as long as you want and look at it. But over the past 5 years, there's been a very tight positive correlation. Is it perfect? No. You can see this correlation spends a lot of time above 0.5, but it also spends plenty of time below it. And it even moves into inverse negative territory sometimes. Now, you don't see it go below minus 0.5 very often. It's very unusual to see inverse correlation to that extent over 20 periods. And that's the 20 periods right up here, that's the default. So I'm looking, this is a daily chart. So I'm looking going back 20 days at the correlation. And the correlation is plotted every single day based on the last 20 periods. So if you look at this chart, you'll see that the QQQ is going down versus the SPY, but that channel's been broken, and now we're starting to move up. We've got some overhead resistance that we're getting close to, but this channel looks like it's been broken, and now we're channeling higher, or we're trending higher, as this blue directional line indicates. So if you're bearish the market, you really want this QQQ versus a spider to start turning back down, because as long as it goes up, it's an indication that the market's likely to go up. The second one I want to show you is the iShares Russell 1000 Growth ETF versus the iShares Russell 1000 Value ETF, the IWF versus the IWD. How does the direction of this ratio impact the S&P 500? Well, again, for the most part, we're going up and we're coming back down, going up, and we were in a steady decline throughout 2022, but we've now broken the downtrend line and we're starting to channel our way back to the upside. And if you look down below, the IWF versus IWD versus the S&P 500, mostly positive. Once again, we do move in the negative, significantly negative or inverse territory pretty often, but not nearly as often as we see it in positive territory. So again, when the IWF-IWD ratio is going up, we expect that the S&P 500 will go up. Right now, look at it, it's down in net inverse territory, because as this ratio has been going up in March, we've actually seen the S&P 500 decline. And that's why we have this inverse correlation. But that doesn't last long. History tells us we're going to go back up into positive territory. So you got to ask yourself this question. Is the IWF-IWD going to continue moving up with the S&P reversing to the upside? Or is the IWF-IWD, is this just temporary, and we're going to start moving back down to positively correlate with the move that we've seen recently to the downside in the S&P 500? Those are basically our two options. One of those two is likely to happen. Based on history, the fact that we've now broken this downtrend and we're moving up, I suspect in time we're going to see the S&P 500 move up. Dow Jones Transportation Average versus the Dow Jones Utility Average. Again, it's just looking at the ratio between these two. When the transports are going up relative to utilities, the market usually goes up. And again, you can look down here at the correlation. The blue shaded area tells us this is very, very strong correlation, that when transports are outperforming utilities, the S&P 500 goes higher. When transports are underperforming, the S&P tends to go lower. But it's not perfect. Again, the red shaded area tells us that occasionally we drop back down into inverse correlation territory. But I think it's obvious that we're in the positive correlation much more often, and it's generally pretty significant positive correlation. So the downtrend's broken, and since October, this ratio has been going up. I talk a lot about under the surface signals. It's not just about the S&P 500. These ratios, this is intermarket analysis. It tells us what is happening in terms of rotation. You don't want to start moving into the more economically sensitive transportation stocks versus the defensive utilities if you think the market's going down. Normally, it would be the opposite. When you think the market's going up, that's when you want to be in transports. And that's what we're seeing, market rotating into transports. The fourth chart I have here, relative chart. This is probably my favorite. Consumer discretionary versus consumer staples. Very simple. Is money rotating into areas of the market where companies sell us the things we want? Or is money rotating into the areas of the market where companies sell us the things we need? Want versus need. Discretionary versus staples. When money is rotating into discretionary, the market usually is moving up. When money is rotating into more defensive areas, the market is usually moving down. Look at the positive correlation here, above 0.5. Very, very strong. we stay up there a lot. How often do we go below minus 0.5? Hardly ever. 3 separate occasions in the last 5 years. It doesn't happen often. Well, recently, January, we had a huge move. We broke this downtrend line. We've pulled back, but we're starting to turn back up again here. So again, I challenge you. Is the S&P 500 going to turn back up with the XLY, XLP? Are we going to continue to see that move? If we break out above that February high, and especially last summer's high on this ratio, there's no denying the S&P 500 is going higher. It would be very, very odd. So watch discretionary. The last one I have for you, copper prices. So we can talk about a lot of different commodity prices. Excuse me. But the one that really has a strong positive correlation to the direction of the S&P 500 is copper. Copper is much more economically sensitive than a lot of other commodities because copper is used in a lot of construction and a lot of things that are directly tied to economics globally. Is the global economy strengthening? Is it weakening? Is the U.S. economy strengthening or is it weakening? If it's strengthening, that tends to lead to moves higher in the S&P 500. When the economics are weakening, then we tend to see S&P 500 weakness. So global demand or even domestic demand can send or will send copper prices higher. We saw that in 2020 and 2021. 2022, we peaked in early March and tumbled into July, which is about the time the market started significantly declining. You can see that positive correlation there. But we've been trending higher now since July of last year, higher highs and higher lows. That has corresponded with a bottom in the market. October was the low for the S&P 500. So we've been moving up with the copper prices. And as long as this ratio keeps moving up, look at the relative, or not the relative, but the correlation. If copper is moving up, chances are the S&P is going to move up. If copper is moving down, chances are the S&P is going to move down. That's why we have all of this positive correlation. To the downside, we have inverse correlation, significant inverse correlation periodically, but not very often. Again, we're talking about odds. These are 5 different areas of the market that when they're going higher or when the ratio is going higher, that tends to lead to higher S&P 500 prices. All 5 of these I'm showing you are bullish right now or in uptrends. You can be the judge of whether you think the S&P 500 is going up or down. What I have been saying is that there's been a lot of manipulation in the market by market makers, by the big financial, the Wall Street firms. That's been pointing me to believing the stock market's going higher. And these ratios, this intermarket analysis, it's telling me the stock market's going higher. So you can look at the S&P 500 and just blindly follow it, use tunnel vision, or which, and I'll say looking at the S&P 500, it's not really giving us any, hey, all-in clues. But when you look at a lot of the underneath the surface areas, it really is the time to be thinking about being long. All right, that's it. Again, I just want to let you know, go over to earningsbeats.com, scroll down. We'd love to have you sign up for our EB Digest newsletter, or if you'd like to try a 30-day free trial to our paid service, you can do that as well. Go to earningsbeats.com. All right, it was a pleasure joining everyone today on your Daily 5. Again, please remember to go over to Earnings Beats, sign up for our free newsletter. No credit card required, and you may unsubscribe at any time. Happy trading, everybody.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.